So what kind of new investment vehicles or opportunities are you expecting to see in the course of the next couple of years, 2 or 3 years, not yet happening, on the horizon, on the cusp, needed maybe, or you can see it now and you're looking for a chance? What should we expect? Benji, I'm going to start with you and come right down the line.
Okay. So again, I'd kind of be excited to very, very interested if the corporate space would grow a little bit more on the green bond side. But I definitely think the big growth area is the securitization side, which was mentioned before. I think that's a fantastic space. I mean, a couple of the things that we've mentioned are kind of on that side in terms of having a quick, quantifiable impact, but really having a big impact. And so I think the securitization side is really the space that I'm hopeful can grow. You know, whether that's on the asset-backed security side, you know, the CMBS with commercial mortgages, or really even on the mortgage-backed security side. And one of the things that we emphasize, and I think it was talked about before a little bit, is kind of on the thought of greenwashing, and, you know, should people be, you know, extremely concerned? Is that something they should worry about? And I'm hopeful that, well, maybe this will sound bad, maybe Mark will hit me later on, but I'm actually wouldn't be that upset if there was a greenwashing case, you know, in the next 5 years. If what occurred was we had a, you know, $250 billion to $500 billion market that occurred in the next 5 to 7 years, and we had one $500 million case of greenwashing, would that be that bad? Then instead of we had this perfectly pure $50 billion little thing that's not going to have that big of an impact? I'd rather that we can. We don't want to push the envelope too far. I didn't say we wanted to have $500 billion of greenwashing that was out there, but I mean to be able to push the envelope at least a little bit, because when someone does make the choice to do something that's going to later be considered greenwashing, I mean, isn't that kind of what this group does? I mean, you go in, you talk with the company, you understand what happened, why did they do this, what's the reasoning for that? I mean, there's going to be, you know, there's going to be implications for that company. Again, don't go and say that I wanted a company to have greenwashing, but what I want is I want us to be able to push the envelope a little bit, so that way we can have a much, much larger pool that will really have an impact, instead of just this cute little, you know, $50 billion pool of purity, which really isn't going to have the impact that we need, really, because we talked about when we need trillions of dollars, and I think that's something that, you know, we really need to work towards.
Terrific. Val?
Well, basically what Benji said. So, you know, what do we see for the future? I think the new green bond space has a lot of potential. I think securitization of all kinds of things has a lot of potential, not just energy efficiency, but distributed generation, and basically anything good that has little pieces of it that you can bundle together. And I think, you know, just on the very important point of greenwashing, we were talking earlier about how a lot of people feel like companies in Western Europe, maybe Japan, some other countries outside of America tend to be a little bit ahead, a little bit more forward. When we look at performance of ourselves, our peers, our clients, and look at the differences that you see in terms of transparency and performance across different markets, there's just a certain level of aspiration that I think, to take Western Europe, for example, Western European companies are more comfortable with aspiration than US-based companies. And I really think that what the environmental market space needs is comfort with a high level of aspiration. We really want to celebrate the green activities that traditional corporates are getting involved in, encourage them to do even more. And I think at this point, I mean, I can't agree enough. We don't want to restrict this space. We really want to sort of lift it up and encourage everybody to have a little bit higher level of aspiration.
When we look forward, one of the primary areas of growth that we look at is really emerging markets. We are subject to demographic changes in the developed world, where we're really facing relatively modest growth. We see economic growth in emerging markets, and that's important, especially when we think about the power markets, where you have a supply-demand dynamic, where you have a shortage in some of these countries. And what gets us really excited is that you see in emerging markets, you have the opportunity to leapfrog legacy technology. So in a place like the Philippines, where they've developed a geothermal power plant, a company that we've invested in, or even places like Brazil, as I mentioned, China and India, where you have the opportunity and you have the economics, that's to say higher energy prices that can foster renewable energy growth and also lead towards innovative solutions to some of our environmental problems. I mentioned China in terms of the policy push, but we've also been seeing more dramatic change at the private sector level with solutions to local challenges in emerging markets around the world. You've certainly seen the mobile technology and mobile services taking off in Africa, and we think that there's more opportunity in terms of solar power, et cetera. And then lastly, I'd say that we've seen relatively progressive reporting initiatives, like sustainability reporting in places like South Africa and Brazil that are as developed or more developed than we see here in the U.S. So we see the ground up push or the grassroots push from consumers. We see some top down policy support or pull from policymakers in many of these countries, and we're seeing a lot of companies that are quite exciting. So that's really the area that gets us excited.
Terrific. So I think from our perspective, it impacts one of the things that we see is the combination of the kinds of trends we're talking about here from a financing perspective and what the impact of those trends can be on the rollout of the carbon solutions. I gave a talk at the National Renewable Energy Labs last year, and as part of the dialogue back and forth, I asked folks, we looked at the financing markets and their response to renewables in particular, and they haven't in fact been very aggressive. One of the dirty little secrets is it's very expensive, has historically been very expensive to finance renewables in the U.S. That's changing, which is terrific. But we are looking at shifts in market, more fixed income opportunities, more aggressive financing terms, which potentially could bring the costs of installed energy efficiency and renewable projects down by a third. So I was asking, and within a couple of years, I was asking the technical guys at the lab, how long would it take you to create an enhanced technology from an existing mature base, which would be a third cheaper than the one you have today? And the answer was typically decades. When you have an established technology, it improves by tiny steps. Moving by a third in a couple of years, unheard of. All of us working on the investment side have the potential to accelerate these very exciting trends in ways that really haven't existed before. External to all the improvements that are happening in the course of labs every place and the large factories and the demand from China, all these markets forces are pushing prices down, but the finance, the power of finance, well leveraged in this particular battle can be just tremendously important. So it's one of the reasons we're so excited about the current opportunities.